Hi, I'm Brien Lundin with Gold Newsletter, and I'm talking here with Keith Henderson of Velocity Minerals. Keith, you've made some news recently with a really big deal with a respected group. Atlantic Gold put a $9 million investment in your company. What tremendous validation that is for everything you have going on.
Yeah, it's certainly going to make a big difference for us. We were marketing ourselves as a small company and not necessarily having that kind of validation. So thankfully somebody with a little credibility, a mid-tier producer, has seen the value in what we're doing and decided to make that investment.
Yeah, because I guess in the retail investment end of it, you're fighting perception in that you're in Bulgaria, which is not a place many companies are working.
Yeah.
But you've had great results, exploration results. You've got a number of advantages for the company in terms of facilities, deposits, permitting, et cetera. But it's a kind of a thing that in case or until some other group came in to really put that stamp of approval on what you were doing, then it would be harder for a retail investor to really understand or take that leap. Do you think that's really going to make a difference now?
I would hope so. We've been telling people for quite a while, probably for about a year, that we felt like what we were doing had some similarities to what Atlantic Gold have frankly already achieved in Nova Scotia. Finally they've kind of come along and said, oh, that does look like what we're doing, and that is great validation. So we would consider ourselves probably to be about 3.5 to 4 years behind where they are today. And today, they've just got to the end of their first year of commercial production. They've produced 90,000 ounces. The similarities are many though. Like they've got a central CIL plant where they're processing ore. They've got a string of pearls, if you like, in terms of these sort of small to medium assets that sit in the region, and that's exactly what we have. We've got a Bulgarian mining partner called Gorupsu. It's a private company, and they've got a CIL plant in the region in which we're working.
Right.
So we basically
that's tremendous. You already have much of the infrastructure, the CapEx already taken care of.
In terms, it's a CapEx saving for sure. It's certainly a time saving, and most of all, it's a prevention of risk. Like if you're trying to permit something that's cyanide related in the processing world, anywhere in the world, perhaps more so in Europe, it provides certain obstacles, I guess, and you can't really plan on the time. It might take a bit longer than you think. So with that in place, we're working on much simpler permitting terms. We're working on open pit operations, which should be much simpler to permit.
So you have these advantages, you have a lot of the CapEx, a lot of the facilities taken care of. You now have that validation by a very respected investor or group. What are the next steps? Well, actually, you have a resource with good economic numbers already. Could you talk a little bit about that?
Yeah, absolutely. In the first year, we focused on a single asset called Rosno, and we drilled just a little over 10,000 meters. The project also had some historical drilling, like most of our projects do. So we were able to get that to a PEA in 18 months. And the PEA was the mechanism by which we earned our 70% interest. Yeah. So we vested that interest. We're now officially in a joint venture with our partner on a 70-30 basis on that project. The PEA was highly positive. I think the NPV5 on an after-tax basis was 129 Canadian. The IRR also on an after-tax basis was 33%. But that's how we earned our interest. We're not finished there by any means, and we've got more expansion to do. So since delivering that PEA in October, we've produced some more soil results, highlighting new anomalies in the area. We've completed about 1,000 meters of drilling in December. We've got good results out of that as well, and it already looks like we're going to be able to push the limits of that mineralizing boundary, and the pits defined by the PEA will expand outwards.
So if you have the CIL plant existing, and you have an economic resource, you have the economics on that resource. At this point, if you're just adding resource, you're adding to the economics as well, aren't you?
Absolutely, and any resource addition will make a very, very fundamental change to the economics. We're aiming to add things that are near surface, on the periphery of the pits, expanding the size, expanding the resources, and it should make a huge difference to the financials.
Now, another great advantage you have is previous work being done. I mean, you can't necessarily take previous drilling or Russian drilling and apply that to modern, Canadian reporting standards and the like. But I would have to think that kind of drilling is very good indications of where you need to work.
Exactly, yeah. We've got, on all of our projects, I think without exception, we've got Soviet-era resources, and in most cases, quite a lot of drilling done already. So that means
where to go.
We're not exploring. We're going in to validate existing non-43-101 resources. We'll repeat a certain amount of drilling. Once we're satisfied that those resources are satisfactory and reliable, then we start to step out and try to expand the resources and get to the point where each of these things fits into our model, which is ultimately we want to get to 100,000 ounces per year minimum, and to be able to sustain that over a 10-year period.
Yeah.
So the PEA at Rosno, it contemplates currently an average of 65,000 ounces per year, peaking at 78,000 ounces.
How many years?
It's a 6-year mine life
Okay.
so far. So, but you can see that we'll be able to add to that. Bringing in another couple of deposits in the region will add to that production profile, and it should be a relatively simple process to get it up to where we try to get to.
Now, a lot of junior companies in this market atmosphere are really struggling with money, and I would guess that was an issue for you at some point, but now it's largely gone with this big investment by Atlantic, right?
It's been a bit of an issue. It's been a tough market the last 18 months. We have managed to put $7 million into the company so far, but that's come largely from the people that we worked with at the beginning, existing shareholders, and of course putting money in ourselves.
Yeah.
And we've been doing it, a little bit piecemeal, maybe $1 million, $1.5 million at a time, which makes it difficult to make really firm plans.
Right.
With $9 million in the bank, we can make a plan for next year and beyond, and we know that we're going to be able to execute on it without having to necessarily go back to the market and look for more money.
Yeah, and more money makes more things happen more quickly, so it's a real luxury to have in this market.
Yeah.
With that in mind, what are the next steps? What are the catalysts in the near future that investors or potential shareholders can look forward to?
Well, once we get this financing closed, we're probably looking at getting something of the order of 25 to 30,000 meters of drilling done this year. About half of that will be done at Rosno as we try to expand and also obviously complete infill drilling as we move it through to feasibility level studies. The other 3 projects that we're planning to hit pretty hard this year, that will account for basically the other half of that.
Okay.
And so there's just going to be lots and lots of drilling, lots and lots of news, and news flow will continue to be good.
And your exploration drilling is basically confirmation or validation drilling. So.
Yeah, so we would hope that a large proportion of those results will be fairly positive. That's good news too.
Well, sounds like a good story has only gotten better, and you've got a lot of good days and good news flow ahead of you. Thank you so much, Keith.
Thank you very much.